Here's what your favorite creators aren't telling you. Do you ever scroll through channels and think, God, they must be killing it? What's wild though is a lot of those creators making 250K or more a year have less than 25 grand to their name. And no shade on them, almost half of people in the whole country who make six figures or more still live paycheck to paycheck. How does that happen though? How do you make $250,000 a year and still feel broke? I'll show you in this video how I, as a CPA and financial advisor who works with content creators every day, see this happen all the time, and more importantly, how we add a zero or two to that 25 grand net worth. Take one creator we'll call Alex, who made $242,000 last year. They were crushing it by every big number you could look at. They had multiple income streams like AdSense, Patreon, merch, all bringing in money. But at tax time, they had about 10K in the bank and owed almost 80K to the IRS. Alex had spent nearly every dollar either back into the business to make videos, buy better equipment, pay editors, all good things, or on life to pay rent, food, and everything else. Yeah, there was a little fun spending, but not as much as you might think. And because no one ever teaches us about paying taxes or really any good financial habits, there definitely wasn't any left over to pay those taxes. I say all that because Alex didn't have an income problem. They didn't have the right system. So let's open up Alex's income and expenses and see where that money really went and how to fix it. Last year, Alex brought in just under 250K in total income from places like YouTube AdSense, Patreon, and a small merch line. Pretty standard mix. But here's what it really looks like once we pull it apart. They spent roughly 30K on editors and contractors, which makes sense because as your time becomes more valuable, you outsource. Another 12K went to travel and collabs, about 10K on equipment and software, and another 10K or so between subscriptions and random business costs that always sneak up. All in, their business costs landed somewhere around $65,000 to $80,000. Now they've got roughly 170K left before taxes. Remember, as a creator, you're self-employed. That means you pay both income and self-employment tax, which can easily take 25 to 35% once it's all said and done. So if they haven't planned ahead, the IRS is coming for around 60K, and suddenly that 250K you thought was life-changing money doesn't look as big anymore. This is what I call the 250K illusion. It's actually a pretty dangerous spot to be in because the income looks huge on paper, which makes you feel like you're crushing it. When you start feeling like this, though, it's really easy for your lifestyle costs to grow and blow past what you're actually taking home. You're like the poorest of the rich people at this point. So let's look a bit more into those two things. How could Alex handle taxes better? When you're running a successful business, taxes are usually the cherry on top, or more like adding salt to the wound. Unlike a normal 9-to-5 job, you don't have anyone taking money out of your paycheck for you. It's all on you. And when you're trying to build the business and stay alive, taxes just aren't the first thing people plan for. Then when April comes around, there's a huge number staring at you and you're wondering where the money is supposed to come from. The simple rule you can follow is to set aside 25 to 30% of every dollar you make as soon as it hits your account. To make it really easy, make a separate savings account called tax reserve and move it there automatically. That simple change acts as a forcing mechanism to stay ahead of it all. Because remember, this isn't just income tax. You also have to pay self-employment tax, which covers Social Security and Medicare. If you miss paying that amount, the amount you owe grows even bigger because of extra penalties and interest, which in Alex's case is why the number owed to the IRS was closer to 80K. They were at the point where they needed to switch to an S Corp. This helps because instead of paying self-employment tax on your whole income, you can pay yourself a fair salary, take the rest as owner payments, which don't get hit with that 15.3%. If you do it right, that move alone can save 20 to 30K a year. Now, let's move to the other problem, lifestyle creep. And this one's even sneakier than taxes. You start making real money and suddenly it's not just about paying the bills anymore. You want all the nice stuff you've had to wait for because you didn't have money. A better apartment because you need a better filming space, a new car because you're traveling more for brand shoots, everything bigger and better because it's all part of the brand. And it doesn't feel reckless. It feels like you're getting what you deserve, but little by little, you're getting used to those bigger bills, and then you start spending cash faster than it's coming in. It's definitely not just a creator problem either. About 1 in 5 households making more than 250K spend more than they make. which is crazy. The people we all think are crushing it are just as stressed about money as everyone else. But when you're making more money, you should enjoy it, right? You don't need to live like a monk. That just burns you out when you feel you're missing out on what you earned. Which brings me to my next point, and stick with me because this is the real root cause of everything we've talked about so far. As a successful creator, you guaranteed have systems for how you're creating, producing, and publishing your content, right? I have yet to meet a creator making $1 million or more a year who's just guessing what video to make next week. Imagine the chaos if you didn't track a video from upload to idea. It's the same thing with your money. As soon as a payout hits your account, you need a system in place that manages it from start to finish. Alex, for example, had no system. Everything went into one bank account, all mixed together, and the balance looked fine until it wasn't. Then they ended up overspending. When you don't know where to send the money when it comes in, things start slipping through the cracks, and those things all pile up until you're just trying to stay afloat. And it's even harder in an industry where your income changes every month. It's okay, next month will be bigger and we'll catch up. And sometimes it is, but more often it's not. Now that we've broken everything down between taxes, spending, and systems, let's put it all back together with a plan that actually works. This is the same system I use with my creator clients to stop the chaos and finally see where their money's going. It's a simple version of what businesses call the profit first model, but made for creators. And before you roll your eyes, no, it's not tracking every penny or living on rice and beans. It's setting up a few buckets so your money moves where it's supposed to automatically. Here's how it looks. In bucket 1, you've got taxes. So for every dollar that hits your account, move about a quarter of it straight into a separate savings account. That's your tax money, not your money. Do it automatically so it's out of sight, out of mind. Bucket 2, you've got owner's pay. This is your paycheck. Pay yourself twice a month into your personal checking and live off that. No matter how much you make in a month, this stays the same. Keeps your lifestyle stable while your business grows. Then bucket 3, you've got your operating expenses. This is where you pay for editors, tools, travel, and all the stuff that keeps your business running. Set a cap on it, and if you hit it early, that's your sign to pause new spending. If something's not clearly bringing in money, it's just clutter. Then in bucket 4, you've got profit and wealth. This is your future money. It goes into investments, your emergency fund, or even a separate account you just don't touch until the end of the quarter. Then every few months you can take a piece of that as a bonus or reinvest it on purpose, not out of impulse. The best part is you don't have to be perfect. You just have to start. Even if your numbers aren't exact, what matters is that you're giving every dollar a job. Because once you do that, you stop reacting to money and start directing it. Now that you got the blueprint, here's how you can set it up for yourself right now. Check the description below for a link to my Creator Income Mini-Audit. It's a free download that in 10 minutes will help you know what to pay yourself and how much to save for taxes. Now, before we wrap this up, where's Alex at? By the end of that year, Alex had made about $250K in revenue, spent about $78K in business expenses, which left around $172K before taxes. There were no quarterly tax payments made, so at the end of the year, Alex owed about $80K to the IRS. After putting the system in place, they were able to cut personal expenses for a bit and save up about $20K to use as a first payment towards the taxes. Then they put the rest on a 6-month payment plan. So that meant for the next 6 months, they needed at least $10K each month just to pay off last year's taxes while still setting aside enough for this year's taxes too. You can see how fast that really snowballs, but with a clear system and some discipline and me helping as an accountability partner, they were able to turn things around on the same income, but a completely different outcome. If you've ever had that gut punch moment like Alex, where you check your bank balance and wonder how it's already gone, don't panic. This is exactly where things start to turn around. If you have questions about this video or your own situation, drop them in the comments or head to my website, oneupadvisors.com, and reach out to me there. Thanks for watching, and as always, happy creating.